did you think, I need to pack this in?
Never.
Why not?
I don't ever give up. I mean, I'd have to be dead or completely incapacitated.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you haven't heard, Elon Musk has a huge package. Compensation package, guys. It's as enormous as it is unique. Kind of like Elon's achievements. In this video, we're going to take an up-close and personal look at Elon's multi-billion-dollar Tesla CEO performance package. What makes it so incredibly unique? Why it's an important clue for the future of Tesla's growth as a company, its stock price, market capitalization, and more. I'll also touch on whether or not this colossal pay package is reasonable and effective, and ask the question, why does no other CEO on planet Earth have a comparable incentive structure? If you own or are thinking about buying Tesla stock, this video is for you. It contains very important clues about what to expect in the coming years, including, most importantly, what Elon Musk is aiming for. Hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the links in the description to WeBull and Stake. Let's get back to it. First, let's rewind the clock to 2018 when Elon's CEO performance package was revealed to a shocked and puzzled CNBC.
Tesla now announcing a radical new compensation plan. It could be perhaps the most radical compensation plan in history. Musk's compensation is going to be tied directly to the company's performance. The executive will receive no guaranteed compensation of any kind at all. He gets no salary, cash bonus, equity. He only gets equity that vests over time, but only if he reaches these hurdle rates, which are, dare I say, crazy. So right now the company is worth $59 billion. Mm-hmm. They run at $50 billion increments. So if he gets the company to $100 billion...
Wait, you're just talking market capitalization, not based on revenue, not based on the number of production?
There's going to be 2 metrics at each step. So the first step is he has to get the company to $100 billion and reach these operational and adjusted EBITDA and revenue number. If he doesn't get either of them, he gets nothing.
That's kind of a weird way to break it down based on market capitalization.
If he gets to 150... and has to hit the operational numbers.
But, I mean, the market can be irrational, so you can't control that.
At each $50 billion number, he collects 1% of the company. If somehow, magically, he would get the company to $650 billion, which is literally what the plan calls for, if you can believe this, he would collect the equivalent of about $55 billion in compensation. Otherwise, he gets absolutely nothing.
What if you get it to $650 billion and then it immediately collapses to $500 billion? Is it just hitting that market capitalization milestone that matters? Or is it keeping it there for a certain time? Is it hitting it?
So here's where it gets even more interesting. The shares vest, but then he has to hold the shares for 5 years at each break point.
You still get it, right? Even if market capitalization is the weirdest thing I've ever heard.
No. You can't. It's impossible to game because even if you were to get the company in the market cap to $100 billion, you then have to, by the way, hit the operational numbers.
On top of it.
On top of it. You have to get both, and then you have to hold the shares for 5 years. I mean, it's weird. So if you were trying to do something temporary to try and get
the stock price up,
you can't, because 5 years later your shares would be worthless.
It would affect decisions on buybacks and issuing stock and floats and all kinds of...
Market cap is just a bizarre.
So interestingly, the last compensation plan that they had in place started in 2012. It was similar in some ways to this. It had a market cap component, and then it had all sorts of...
I've never heard of another company tying...
Nobody's ever done it. But he literally gets nothing. And the other thing that's interesting is if he gets to, let's say, $99 billion, he gets nothing. If you get to the next one, if you get to $149 billion, you get nothing. If you get... So but it is truly eat what you kill, skin in the game.
That's so fun to watch. Elon's track record. The past can provide useful clues about the future, especially when consistency is a recurring long-term theme. In the case of Elon Musk, we have a multi-decade history of disruptive innovation, incredible execution, brilliant leadership, and repeated achievement of seemingly impossible goals. This is not up for debate. If you're not sold on this fact, you simply have not done your homework. There is zero ambiguity here. 14 years ago, Elon Musk wrote a blog on the Tesla website entitled The Secret Tesla Motors Master Plan, just between you and me. And what was laid out in this plan? In short, build a sports car, then use that money to build an affordable car, then use that money to build an even more affordable car, and, while doing above, also provide zero-emission electric power generation options. Tesla did what they said they would do. All of it. Not only were these goals achieved against almost impossible odds and under intense opposition, but they were ticked off in incredible fashion. The original Roadster did great. The Model S that followed was named Car of the Century and won every award ever. Not to mention, 8 years later, no automaker has produced anything that can match the 2012 Model S. Tesla doesn't just execute, they dominate. Then came Model 3, which has absolutely humiliated the entire legacy automotive industry. The proof's in the pudding. Tesla's dominance shows in sales figures, and Tesla's market capitalization is now far more than any other automaker on Earth. Hell, it's even surpassed ExxonMobil. And finally, Tesla also released solar panels and solar glass roof, completing their master plan in about a decade. Cool story, bro. What's the point? We have a decade plus history of Elon Musk executing incredibly challenging plans and achieving almost impossible goals. But it doesn't end there. Maybe you've heard of SpaceX. Yeah, you know, the company who was ridiculed by most and testified against by former astronauts. Yeah, that company. The one who has developed the world's only reusable orbital class rockets. The only private company to launch US astronauts from US soil. That one. It's worth noting, Elon Musk is one determined motherfucker. To doubt this man today, regardless of how lofty or difficult a challenge he is facing, is tantamount to advertising your own incredibly low self-belief. It says everything about you, nothing about Elon. I don't say this to be rude, just honest. How can anyone who isn't suffering from mental illness, diminished cognition, or cripplingly low self-esteem doubt a guy who says, "I'm going to do the impossible," then does it? Again, and again, and again, and again. This track record matters. Don't bet against Elon. Gee, that sounds good. I might make a shirt. Oh wait, I already did. Link to merch store in description. With the groundwork out of the way, it's time to talk compensation. Elon Musk does not get paid a salary by Tesla. That's right. Well, kinda. Elon Musk receives a $1 yearly salary for his work at Tesla due to California law requiring him to be paid something, but he refuses to accept his paycheck. So how does Elon get paid? Good question. Elon Musk gets paid in Tesla stock options, not cash. Stock options, aka the chance to buy heavily discounted Tesla stock in the future. But there's a catch. Elon only gets paid if he brings Tesla shareholders tremendous value. And I do mean tremendous. First, let's wind the clock back 8 years to when the Tesla board proposed the 2012 Tesla CEO compensation plan. In it were a number of lofty goals to achieve, including operational milestones relating to the development of Model X and Model 3, aggregate vehicle production, a gross margin target, and a sustained incremental increase in Tesla's market capitalization, which at the time was $3.2 billion. Yes, 3.2, not 32, 3.2. A few years later, Elon had achieved 9 of his 10 targets, and in order to dangle a new carrot, the 2018 Tesla CEO performance package was drawn up. In it, a series of audacious goals around market capitalization, gross margins, and profitability. Elon Musk's 2018 CEO Performance Award. Tesla's market capitalization was $59 billion when the 2018 CEO Performance Award was announced. Today, it's approaching $300 billion. The 2018 CEO Performance Award laid out a series of 12 tranches, each unlocking stock options equivalent to 1% of outstanding Tesla shares at the time. In other words, each time Elon hits a target, he can buy another 1% of the company, if he wants to. Let me remind you once more, Elon does not get paid a salary. The only way his wealth increases is by creating enormous value to Tesla shareholders. These tranches are targets, goals, and they're an incredibly useful clue to Tesla investors and shareholders. We can see clearly exactly what Elon is aiming for, exactly how much annual revenue Tesla needs, exactly how much profit, exactly how much the company needs to be worth. Elon is aiming for these targets, and they show us what the future may hold. If reusable rockets can be achieved, so too can these tranches. For Elon to achieve all of his goals, Tesla will need to grow its market capitalization from where it is today to a whopping $650 billion. A huge increase in value, but less than a tripling from where it is today. For context, when the 2018 performance package was announced, Tesla was at $59 billion, a mere fifth of its current valuation. In other words, Elon is well past halfway already, and it's only 2020. However, there are other targets too, including revenues which need to approximately quintuple and profits which also must soar. But as we know, Tesla is now a highly profitable business on the cusp of S&P 500 inclusion. With costs falling, increased capex efficiency, and huge growth, all of these, I believe, are just a matter of time. If we do some very rough back-of-the-napkin numbers, just real simple, and assume that Tesla's stock price grows directly in line with market cap, For Elon to unlock the final tranche, Tesla will need to increase about 2.5 times from here. That would bring us to a stock price over $3,500 per share. Something to think about. Why don't other CEOs have Elon's package? Spoiler alert, they lack conviction or yearn for convention. What other CEO on planet Earth would accept zero salary, have most of their net worth tied up in the company they lead, and choose only to get paid if they bring shareholders enormous value? This is worth thinking about. Who do you want to back as an investor? The CEO who gets paid regardless of performance, or the CEO who only gets paid for exceptional performance? The truth is, no other CEO and or board has the balls and belief to offer, let alone accept, such a deal. This should tell you everything you need to know. And yes, I will acknowledge, there are some virtue signaling founder CEOs who loudly flaunt their $1 salary as a badge of honor, showing how they're in touch with their employees. But none of them, as far as I know, have a comparable package in which if they get no results, they get no pay, no options, no compensation of any kind. How does Elon pay rent? Since Elon Musk doesn't take a salary, how does he pay for expenses? How does he live? Great questions. In a nutshell, he borrows for expenses. I know this may sound mad to some of you, but when you reach these echelons, the rules change. Today, Elon Musk is worth about $70 billion. A typical CEO might periodically sell stocks to cover expenses, or they're paid a salary, not Elon. He knows his shares will be worth far more in the future than today, and that he'll need that money to make Mars happen. So instead, Elon borrows against his assets to cover his expenses. Pretty good deal if you ask me. Shareholder activism. So it turns out that there's some Tesla shareholders out there who don't like Elon's performance package at all. In fact, they're so put off by this that they're willing to file lawsuits requesting he be removed as CEO. I find this a little odd. I mean, actually, fuck being delicate and fuck beating around the bush. In a recent exclusive Patreon Q&A, I was asked about these clowns. Here's what I had to say behind what I thought were closed doors. The unvarnished truth.
I'll be blunt, those people are morons, period. His compensation is tied directly to increasing shareholder value, like directly. It has market capitalization targets. Anyone who thinks this is a bad idea is just a moron. Black and white. It makes 0 sense. 0 sense. Here's what I think. Anyone who considers this to be a problem has just got something in their psychology that makes them think it's not fair, he doesn't deserve it. Because in their mind, no one could possibly create that much value. Because they have some kind of complex where they don't think they're worthwhile. Maybe they don't think they're worthy of love. Maybe they had a tough childhood. That's where that thinking comes from. If you look at it rationally, he doesn't get paid a salary. He doesn't get paid at all unless he increases the value of the stock. He literally does not get paid, right? And his compensation package is an incentive for him to do exceptionally well by causing the company to do exceptionally well, which means stockholders do exceptionally well. People just nitpicking and being douchebags, to be honest. Like, seriously, morons. I'm not usually that blunt, but there's no other way to look at it from my view. Morons. Makes no sense. Zero logic. They're coming from an emotional, not a reasonable place.
You know, on second thought, maybe using the word moron was a bad choice. I think fuckwit is more appropriate. Anyway, the point is, Elon Musk has a track record of achieving audacious goals. People laugh, then Elon proves them wrong, again and again and again and again. Should Musk unlock all 12 tranches of his 2018 performance package, which we know he's aiming for, Tesla shareholders will do exceptionally well. The stock price will be much higher than it is today. The company will be doing far more revenue, making gargantuan profits, and most important of all, Tesla's mission will have been a success. The transition to sustainable energy will have been massively accelerated. This matters. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and Stake. Thanks so much for watching. Let me know your thoughts in the comments below. Do you like Elon's massive package? Will he reach all 12 tranches? If so, how long will it take? And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. And you can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.